morning, welcome to CurrencyChange Daily Market Update on Wednesday, 4th of September 2013. My name is Daniel Capps, I'm a Senior Broker at CurrencyChange. The most important annual economic event will start tomorrow for a two-day summit with the heads of state of 20 of the largest economies in the world, essentially the G20, in St. Petersburg, Russia. It will completely be overshadowed by what President Obama calls a limited and narrow bombing of Syria without the authorization of the UN Security Council. While US strikes on Syria have been delayed, it seems unlikely they have been cancelled, with noises from Congress suggesting Obama may well get the support he wants. A substantial upswing is underway in the G7 economies. Almost all business surveys have surprised on the upside, including July and August's PMIs, and consumer sentiment has been rising fast, even in the most impaired economies, such as Italy. It is now clear that after many second quarter GDP reports showed early signs of recovery, with Europe's recession ending after 6 long hard quarters, growth will continue to accelerate in the second half of this year. We also observe at CurrencyChange that rising government bond yields, where the G7's GDP weighted average 10-year government bond yield stands at 2.48%. This is a rapid advance from the average 1.5% yield at its low in May. Looking at the 10 bear bond markets from 1979, we see that on average the S&P 500 has risen by 22% in the subsequent 500 days. With regards to US data, US consumer spending barely rose and inflation was tame in July, offering a cautionary note on the economy as the Federal Reserve weighs cutting back its massive bond buying programme. The Commerce Department said on Friday consumer spending ticked up 0.1% as outlays on services were flat and purchases of durable goods such as automobiles actually fell. Spending was also held back by weak incomes. June's increase in consumer spending was revised up to 0.6% from a previously reported 0.5%. The tepid demand dampened inflation pressures last month. A price index for consumer spending edged up 0.1%, slowing from a 0.4% increase in June. Also, with regards to manufacturing, the US has actually expanded more than the forecast in August to the fastest pace since June 2011, a sign the sector will contribute more to the expansion in the second half of the year. The Institute for Supply Management's factories index climbed to 55.7 from prior month's 55.4. Arizona-based group's report showed today. 50 is the dividing line, essentially, between growth and contraction. Also in the US, the July trade figures are expected to show the balance remains on an improving trend despite widening a little on the month, while the Beige Book release should paint a broadly improving economic picture as a backdrop to this month's expected start of the Fed tapering. With regards to Europe today sees the final estimate of Q2 GDP for the euro area, which is expected to reaffirm the preliminary 0.3%. UK, following the stronger than expected UK manufacturing and construction PMI prints earlier this week, today's services PMI release for August should provide evidence that the UK upswing continues to essentially strengthen. With regards to Asia, the Bank of Japan might consider additional monetary ease if Japan goes ahead with the sales tax hike next year. With regards to China, permanent services PMI rose to 52.8, 5-month high against July's 51.3. Live exchange rate: sterling dollar 155.81, sterling euro 118.40, sterling Aussie dollar 171.20, and sterling New Zealand dollar 198.60. Dollar strength continued yesterday, but we suspect we have reached somewhere close to the limits for the dollar upside ahead of the ECB and Bank of England meeting tomorrow. The last session saw the sterling euro rate finally close above 118 for the first time since May, after the UK construction PMI figures helped support market sentiment on the UK outlook. Economic agenda, UK time today at 9 o'clock this morning was European market PMI services for August, UK services PMI also at 10:30, Euro GDP out at 10 a.m. Dollar trade balance for July is out at 1:30 this afternoon, and most importantly is at 7 o'clock this evening, the US Fed Beige Book. If you require any further information, please visit us at CurrencyChange.com, or you can contact us on 0207 373 2686. Have a nice day.